Hello and welcome to another update video about ETH. Yeah, it has been quite a boring day, we have to say. So obviously, bigger picture, nothing changed. Also here on the smaller time frame, nothing really changed. I mean, in the end, we did get that rejection in the resistance area that I showed you in the previous video. It did go a little higher, but then got rejected. There was no sustained break above the 78.6 retracement level. So yeah, I mean that, or let me just take out the 50% and the 61.8 just to tidy it up a little bit. So that leaves the door open for a drop in the white wave count deeper into support. Yeah, so the support area also has not changed from the previous videos. We're still dealing with 1551 to 1578 as support. And yeah, in terms of resistance, we've got still 1613 there on the chart. Yeah, and it leaves the door open for the white wave count, yeah, for a deeper drop in wave B. That's still what I would prefer, yeah, because I don't like the size of the wave W here. So if the B wave already bottomed, that's of course possible. For me, it's not ideal. But I'm always looking for the ideal structure. So it would be nice, especially as it did not overshoot the 78.6 retracement, which is the standard the standard resistance area for the X wave, to go down in the Y wave of wave B for a clearer 3-wave move. This was a bit short, I have to say. It's okay, it's valid and everything, but it's a bit too short for me, really. Now, however, it could be that we obviously got a bit of a rejection here today. It could be that this is a leading diagonal in wave 1 though, because if I go to the smaller time frame, you can see this is a 5-wave move up actually. At least you can count it that way. The thing is, diagonals, you can count diagonals always corrective, so it's certainly not an impulse, which is the other reason why, you cannot trust diagonals. So that's the other reason why I prefer the white wave count. I rather see this as a corrective move, as a there's probably another WXY structure in wave X. Whereas it could be, if we talk about a more bullish scenario, yeah, the yellow wave count is the direct pathway higher without a reset of the B wave lower, or without that lower B wave. Yeah. You would say this was a wave 1 in 3 waves, because it's a leading diagonal. This here a wave 2, this here a wave 3, this here a wave 4, this here a wave 5. And then we have 5 waves up in some kind of a trend channel. And this would be a wave 1. And we would now come down into wave 2. So to keep that count alive, which is the bullish scenario, it obviously needs to hold the beginning of the wave 1. Yeah, so it needs to hold the 1582 level, 1583. Though I don't trust diagonals for a good reason, because you can't trust them. And yeah, I would like to see a deeper Y wave of wave B, okay? But that is a possibility. I mean, but it's not the high confidence. It's a possibility, but I can't say this is like a high confidence trade setup. Now, anybody who wants to jump into this wave 2, feel free to do it, right? I mean, support for this is, but it's just not clear because it's not impulsive. Support for this is here 1595 to 1590, which also tells us that a drop below 1590 would again put the emphasis more on the white wave count. Yeah, so that's sort of what we're watching for. And yeah, I mean, again, it looks corrective. Today was a rather boring day, but despite CPI, so it didn't really generate a lot of volatility. Maybe we get a little bit of delayed action, but then, CPI inflation data didn't really differ from what the market expected. And ultimately, it takes a break above 1620 still to confirm that here the C wave to the upside is running. So in both scenarios, we expect higher prices in the C wave. I think that's a clear statement. I would have to change my view at some point, but at the moment, in both scenarios, I expect higher prices in the C wave. The question that we're dealing with at the moment is how low will the B wave go? And my preferred option is it goes a little lower, deeper into support. which would provide better reward to risk ratio if anybody would want to trade the C wave higher, right? But yeah, at the moment, that's sort of the view. I highlighted to you in the previous video, we have here an inverse head and shoulders pattern. It is an ugly one. And to be honest, it would not look right if it does this again. So still, though, it's an inverse head and shoulders. The 1620 level is the neckline should it break out to the upside early. And then an absolute key resistance level within the larger resistance box here is 1664. It's also here where we had previous resistance on the 6th of September. So that's my update about ETH. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. As a channel member, you get access to a weekly live stream. On Sunday, we've got the next one. You get access to Discord and Telegram, the live chat rooms. You get access to educational content on Discord. And as a gold member, you get additional short-term market updates, which can be extremely valuable if there is a lot of volatility. Okay, that's my update. Thanks a lot for watching. Bye-bye.